Good evening all. First I'd like to start by thanking my colleagues in the Registry of Credit Unions for inviting me along today to speak to you on the topic of anti-money laundering and countering the financing of terrorism, or as we'll reference going forward, AMLCFT. I work within the on-site supervision team within the anti-money laundering division, which is we'll refer to as AMLD going forward. That's enough with the acronyms. And this evening what I want to do is give you a bit of background in relation to money laundering and terrorist financing. So that gives you some context as to why the legislation governing the area is in place and why credit and financial institutions, including the credit union sector, are required to put in place systems and controls which, as an output, are the focus of our on-site engagements, our communications and outreach activities, and our publications. So, I'll then go on to explain the bank's role within the regulatory framework that governs AML-CFT and touch on how the central bank approaches the supervision process. We'll move on then to look at the Mutual Evaluation Report of Ireland, which was undertaken recently by the Financial Action Task Force. And lastly, something quite topical, which I hope you're all very much engaged with at the moment, is we'll touch on the forthcoming requirements that are going to be implemented with the fourth Money Laundering Directive. Just to mention as well, I know a number of my colleagues within the AML division have been on the road, speaking at various MLRO forums. I think there was some recently done in Cork, Athlone, and another one recently in Croke Park. So while some of the content may be familiar, please do bear with us or with me. Focus today, kind of interestingly enough, as Pierce touched on earlier on, we're seeing trends with corporate governance as they have in the Registry of Credit Unions. So that's really going to be the focus of the discussion this evening. So starting then with money laundering. So this involves the concealing, converting or transferring of property, usually money, which is the proceeds of criminal conduct. And there are a wide range of criminal activities which are referred to as predicate offences that are associated with money laundering. If you look at the news reports or investigations on TV programmes such as Prime Time in recent weeks and months, you'll see that these activities are happening in Irish society today, and they're quite relevant to us and to the sector. So some examples of those activities would be illegal trade in tobacco and fuel, illicit gains from prostitution and people trafficking, organised crime and drug trafficking, tax evasion, counterfeiting of goods, and these last two activities in particular, tax evasion, has a significant impact on the economy in terms of losses to the state, and equally counterfeiting of goods does have an impact on legitimate business activities. So the aim of preventing criminal proceeds from entering the legitimate financial system, we view as only being able to be achieved through the implementation of strong legislation and equally, within each institution, effective AML systems and controls. So if we move on to terrorist financing, this act mightn't involve the proceeds of criminal conduct, but rather can represent an attempt to conceal the origin or indeed the intended use of funds. So they may later be used for terrorist and criminal purposes. And one of the key distinctions here is that the origin of funds can be from a legitimate source. So by way of example, some cases that you're probably familiar with, funds used to obtain weapons to carry out the Charlie Hebdo attacks in January 2015 were actually relatively small, and they were obtained through the following sources. So a €6,000 consumer loan, which was obtained with forged documents, an overseas used car sale, and cash transfers linked to the sale of counterfeit goods. Investigators reviewing the London bombings that occurred in 2005 also estimated that there was a low cost in regards to this event. Approximately £8,000 sterling is the estimate. On review, it appears the funds did come from an individual, Mohammed Siddiqui Khan, who had been in full-time employment as a teaching assistant. A legitimate salary was used to fund the attack. So that's a key difference between the two processes. And it is important to note that while the likelihood of terrorism appears to be quite remote Ireland is still vulnerable. And I think it's important to emphasise at this point that the whole purpose of the work that we do and the work that credit unions are doing is to, in the context of the AML space and the terrorist financing space, ensure that the social and economic consequences can be reduced. And the aim of having controls in place is to deter and prevent, I suppose, criminals and potential terrorists from accessing our financial system. So I'll just move on then to speak about the role of the central bank. So the primary piece of governing legislation is the Criminal Justice Money Laundering and Terrorist Financing Act 2010, as amended by the Criminal Justice Act 2013. So we'll just call it the CJA 2010. Well, in simple terms, I suppose there's two key aspects to this piece of legislation. So the first is the criminal justice and the law enforcement element, and the second being the regulatory aspect. And this is where the central bank has their role. It's in the regulatory aspect of the domestic frameworks. And again, just to stress, the bank is not involved in the investigation or prosecution of any money laundering or terrorist financing offences. These functions rest solely with An Garda Síochána and, in some instances, the Revenue Commissioners. So the powers of the bank are enacted under Section 63 of CJA 2010, which designates us as the competent authority for the monitoring of credit and financial institutions. So to allow us to fulfil our function, the bank in 2010 established the Anti-Money Laundering Division. And it was something that we do get asked a lot when we're out on site is for advice, and it's important to note that the role of the AML division and the bank isn't to provide legal advice on how a firm or credit union can comply with the requirements. And part of the background to that is because of the huge population that we're responsible for. So we're responsible for a population of over 11,000 firms within different sectors with different customer types, different jurisdictions, and different product and service offerings. So typically, what may be appropriate solution for one firm or entity is not appropriate for another. So it comes down to it that I suppose it's up to each firm or each credit union to determine how they can comply with the legislation. And we do get a lot of engagement out there with the credit union sector in particular. The engagement is very good. And I suppose at the point of inspection, it's when we'll discuss with credit unions the rationale for their approach to how they satisfy themselves that they're meeting the obligations of the Act. So what you can see on screen here is the central bank's AMLD's money laundering terrorist financing risk assessment. And the reason we conduct this is to, I suppose, understand the population that we supervise, understand the inherent risks associated with different sectors and different firms, to determine the level of supervisory engagement that they should receive. So you'll see from the side up here that firms are rated either as high, medium low, or low, and that will drive the supervisory cycle. So this risk assessment is kept under constant and regular review as new information comes to light. And we can further refine or change the risk ratings either at a sectoral or at a firm level. So while the categories are quite broad at present, it's worth noting that the rating for a sector could in theory change, or there could indeed be outliers within a section such as credit unions. So how do we go about the supervisory process? Well, tools we utilise at present are engagements such as the on-site inspections, so very similar to the PRISM engagement that you'll be familiar with from the Registry of Credit Union inspections, to evaluate the firm or the credit union's compliance with the key provisions of the CJA 2010. We also conduct review meetings with key personnel at various credit unions involved in the AMLCFT function. And this is very much viewed as a two-way engagement to allow us to understand the challenges that the credit union sector is facing, the risks that they have identified, and also to evaluate compliance with the legislation. Review meetings may also be conducted as part of a follow-up meeting where there might have been issues identified during a previous inspection. And typically the last engagement we have is the risk evaluation questionnaire, which a number of them were issued in 2017, so you might be familiar, you might have seen it come through your credit union. These REQs are a series of questions which are returned to the division for review and assessment, and they really help us in determining how well developed the credit union's AMLCFT framework is, and to identify trends within the sectors. Given the audience here tonight, I would stress and reiterate that it's important that boards are comfortable with the information that's returned within the risk evaluation questionnaire, and that they're satisfied with the statement of compliance. That is to say that the credit union is materially compliant with the requirements of the legislation. So we do look also to provide guidance and feedback to the industry through other forums, such as tonight's event. We have a lot of information available on our website as well, which, as was mentioned earlier, underwent a revamp in 2017. So if you haven't recently paid a visit to that particular website, do take a look. And we also issue sectoral reports and thematic bulletins, all of which again are published on the website. So this leads me to the subject of the sectoral report that was issued for the credit union sector, and I really hope that you're all aware we published the report on AMLCFT and financial sanctions compliance in the Irish credit union sector in May 2015, so 2.5 years ago almost. Within the report we set out our key findings from previous inspections in the sector and also our expectations with regards to each of the areas. So I suppose the belief within the AML division is that if a credit union were to take up the report, even though it's a 2015 report, look at the content, conduct a gap analysis between the expectations set out in that report and where you are with your AML-CFT framework at the moment, identify any weaknesses and rectify them, you will be in a good place to demonstrate that you are compliant with the requirements of the CJA 2010. Okay, so although, as I mentioned, that report was issued 2.5 years ago, recent inspections have brought to light that many of the issues highlighted in that report have yet to be considered by credit unions. And in fact, levels of awareness of the content of the report itself varied greatly between credit unions. So again, I'd like to take this opportunity to encourage you to review the report if you've not already done so, as it'll give you a good sense as to what the AML-CFT framework for your credit union should be addressing. And equally, you should also be discussing with your MLRO as to whether a gap analysis has or hasn't been conducted within the credit union. So the report also aims to build awareness at board level of what's required to implement and oversee an effective framework and the board's role within that, including, of course, the importance of tone from the top in terms of AML-CFT compliance matters. And I suppose the message that we're seeing, or what we're seeing on the front line when we go out on inspection, is that operational staff and MLROs within the credit unions need the right level of support from the board in order to put the necessary measures in place. So what I'm going to do briefly is bring you through the aspects of the framework that should be in place and should be a particular focus for board members. And I'll also go on to discuss some of the particular findings and expectations which we would like to sort of flag and see some improvement on within the sector. So if we look at corporate governance, first of all, this section is covered under Section 54 of the CJA 2010, and it sets out obligations under a number of areas. So starting with the board, and I suppose pretty key here is that the board is ultimately responsible for CJA-CFT compliance, AML-CFT compliance. They should be playing a critical role in embedding an AML-CFT compliance culture, and they must ensure that there's an appropriate amount of resourcing within the AML-CFT function. And it should be noted that the MLRO does also have a role to play in, I suppose, the development of your risk assessment, your corresponding policies and procedures, and the training function. But again, ultimate responsibility does sit with the board. Moving on to the risk assessment then. The purpose of this is to identify and assess the risks relevant to your credit union and decide on the appropriate controls to be put in place via your policies and procedures. And the risk assessment should very much inform the policies and procedures. So what have we found to date? Well, in relation to the board, there are instances where we've identified that there's insufficient understanding of the legislation and forthcoming regulatory updates. And I suppose this gives rise as to the level and the quality of training that directors are receiving. Another reoccurring trend was that board minutes weren't demonstrating that there's sufficient discussion and challenge of AMLCFT matters at board level. And typically, it was a failure to document within board minutes that those discussions and that challenge had occurred. With regard to risk assessment then, the key findings were that risk assessments weren't appropriately identifying and assessing risks specific to credit unions. So we found that templates were in use quite frequently, and that's a great starting point, but unfortunately those templates did not appear to be tailored to the specific product offerings, membership, etc. of each credit union. So in order for a credit union to apply a risk-based approach in practice, the starting point is the identification and assessment of risks and the credit union's exposure to those risks. Okay. With regards to policies and procedures, generally it was found that credit unions did have the policies and procedures in place, but I suppose there were areas where improvement could be put in place. Typically it was found that policies and procedures didn't cover all aspects of the Act. Again, similar to the risk assessment, they weren't necessarily tailored to the business model or the operations of the credit union. In some instances, there were good practices in place, but unfortunately they weren't documented within policies and procedures. And again, in many cases, we did find that they did not align to the risk assessment. With regards to the MLRO, then in some instances, and again I should be reiterating it's not in all instances, but in some instances it was identified within credit unions that there was a lack of awareness of the regulations, the legislation, a lack of understanding and awareness, or I suppose awareness in general that the sectoral report had been issued, lack of appreciation of how the risk assessment should be aligned and inform the policies and procedures, MI not being provided to the board, and a lack of training, specialist training for MLROs. It was also observed that in some credit unions, MLOs had shared responsibilities and other duties to complete on top of their MLO responsibilities, and the function wasn't adequately resourced. So moving on to what the expectations are with regards to these areas. So in terms of the board, just to ensure that roles and responsibilities are documented within policies and procedures, that the board can demonstrate strong awareness of the requirements and relevant publications, that you're ensuring that you're receiving appropriate training to discharge your responsibilities, and that you can demonstrate oversight of the function, so be it through discussion and challenge of the risk assessment, assurance testing, policies and procedures, etc. To follow on then, the risk assessment itself. So obviously, please make sure you have a risk assessment in place. This is the top of your AMLCFT framework. And it should cover your risks. There's plenty of information available on the website, but starting at, I suppose, a more basic level, regards to geographic risk, member risk, channel or distribution risk, and product service risk. The methodology for risk ratings should be documented. There should be evidence of review and approval. And it should incorporate controls and mitigating factors in place within the credit union. So policies and procedures, the expectation then is that it covers all aspects of the Act. They're clearly documented and tailored to the business. They include the roles and responsibilities of the key personnel. They're reviewed and updated regularly. and evidence of that review is recorded. And I suppose that they do give step-by-step guidance for staff so they can effectively carry out the policy decisions that you've made at the board level. With regards to the MRO then, the Central Bank again expects that they're adequately trained to carry out the role and understand what is involved with the role, have sufficient time to dedicate to that role, and I suppose do play a part in the development of policies and procedures and facilitate training within the credit union. They should provide regular reports to the board and execute reporting obligations that are set out under in terms of submitting SDRs to the Gardaí and Revenue Commissioners. So I suppose the board's role in all of these different aspects is to ensure that there is challenge with regard to the various aspects of that framework to ensure that they remain fit for purpose and tailored to the needs of your specific credit union. You should also be ensuring that there's appropriate MI on the operational aspects and assurance testing being conducted and ensure that the framework is operating effectively.